All right. Well, we've got a great webinar for today. I know this is a topic we get a lot of questions about. A lot of small business owners want to find a way to make this work. Health insurance for their employees. Everybody needs it. And the way it works now is, most folks do get it through their employer. And so we want to see if we can help some folks chart a path and figure out the right way for their employees.
Yeah, and get it all set up in your systems, make sure everything's processing correctly, all that good stuff. I do have a couple, brief policy tweaks at the very end, but they're kind of off topic, so I kind of separated those out. But other than that, we will be talking about medical insurance. So I'm going to kind of start here with how you'd set all this up. The key, I talked about this when we did the HSA accounts as well. Do not confuse the two. I've seen this happen a lot where someone is like, I'm fairly certain that those are the same thing. They are different. Don't, in our previous webinar where we did the HSAs, which should be posted if you guys want to review it, I did post this same little graphic, but I did highlight different things. Just keep in mind, certain things look very similar in there. Make sure you're not picking like an almost correct deduction. If you're ever not sure, reach out to your payroll provider and we can assist and be like, hey, this is correct, isn't correct, etc. These will get deducted from the employee's check. We've had issues in the past with employees not realizing that this was going to get deducted, that they thought there was going to be some money handed to them and then they would deposit it into an account. But typically this gets deducted from their pay. Then when that is deducted, there's like not a whole lot of extreme integration. There is an integration option, which I'll get to next. But when you pull those reports, you'll be able to see how much has come out in the medical insurance. So you'll get like totals. You can split those reports out into months, quarters, depending on whatever works for you. And then you're able to pull the totals off that and see, okay, this is how much we paid in medical insurance. And that's how we typically see people do it. However, you can integrate a company, but it isn't an electronic integration. It's a little more complicated than that. So just be advised if that's the way you want to do it. It is going to look a little something like this. So we'll have this neat little drop-down menu on the side once you click on your deductions. And if you can see, it's kind of small, but there's like a payee tab down here. You can set up a health insurance company as a payee. It's not going to like automatically feed everything in. It's going to print off a paper check that is tied to health insurance as a payee. Then this can be deposited into the correct account. And that's basically the only way we can really integrate these systems. However, you can heavily edit the way they work in your system. So you still do have a lot of customizability. There's still, a lot of ways you can do this process. It's just that when it comes to integration, we don't have anything that can set up directly connecting everything. While you're in this drop-down menu, there are a couple other options though. You can change it between percents, fixed amounts. You can add an annual limit. There's all kinds of options in this little deduction tab. Make sure you're following an agreement with these medical insurances. And before choosing your exemptions on those taxes, please reach out to your payroll providers. I really don't recommend, just clicking the tabs that you think are correct and hoping that it's going to shake out. I'd hate to see someone show up with a huge tax bill because they just skipped something that they were supposed to be hitting. I really always highly recommend just make sure you reach out to your payroll provider, make sure those exemptions are correct. We're here to keep you compliant. So, we're always willing to be a resource on that kind of thing.
All right. Well, then let's get into some of the tax benefits that you can get from offering your, health insurance through your work. Of course, there's lots of great business benefits. Your employees are going to be healthier, they're going to be happier. It's a great way to attract and retain talent. But there are some specific tax benefits that you can get out of offering the plans like that. First one, not so much for your employees, but this is actually for yourself. If you're a small business owner, you can take advantage of the self-employed health insurance deduction. So you do have to have self-employment income one way or another, whether that's as a Schedule C sole proprietor, whether that's as an active partner of a 1065, or as an active shareholder of an S corp. The biggest stipulation here, you can't have an offer of any other coverage. So if you have maybe you have your normal W-2 job, if you got the side hustle business, If that W-2 employer is offering you health insurance, you're not eligible for this deduction. Similarly, if your spouse is working a W-2 job, maybe completely unrelated to the business, if they have an offer of health insurance that could apply to you, then you are also still not eligible. You got to take the employer provided plan. You can't do your own and get the deduction. If you have a 1065 or 1120S taxed business, so partnerships and S corps, the business itself does have to be the one to pay the premium. So you can't just pay it yourself and not include it in the books whatsoever for the business. Now, it could be a reimbursement. I wouldn't recommend that. I would definitely recommend having it be paid directly from the business account. That way you know you're keeping track of it and kind of just following that general philosophy of business expenses from a business account, personal expenses from a personal account. What is a little tricky, what throws people off here, is that it is initially taxable. So it's to the owner. So whether it's on your K1 from your 1065 or your W-2 from your 1120S, S Corp's owners need to have their W-2 payroll, it is going to initially be taxable. Now, it's only taxable for income tax purposes. It's not subject to self-employment tax if it's a 1065 or payroll tax if it's a W-2. But it is initially taxable so that you can deduct it again on your personal return if you're eligible. The reason for that is there's certainly nothing stopping the business from paying those premiums, but they don't want you to be able to get the net benefit unless you actually qualify for the plan, for the deduction, I should say. But what about for your employees? So this is usually one of the best options for small businesses, and that's a SHOP plan, which is eligible for the small business health care tax credit. It's only for employers who have 25 or fewer full-time equivalent. That's based on 40 hours. So, if you have 5 employees and they each only work, 10 hours a week, well, then you've hit, more than one full-time equivalent. So maybe you have a small business where everybody's part-time, maybe you have well over 25 employees. As long as it adds up to 25 full-time equivalent, then you're good. Also, it needs to have an average salary of under 65K. So, generally, working class type jobs, that's what's going to be eligible for this. You as the employer, in order to get the tax credit, you do have to pay at least half of the employee's premiums. And you have to purchase it through the SHOP marketplace in order to get that tax credit. The SHOP marketplace, it's very similar to the ACA healthcare.gov marketplace. I think it might even be the same website. And it's very similar plans as well. You've got your bronze, silver, gold, platinum plans offering various levels of coverage. So if you're familiar with applying for and getting an ACA healthcare plan, it's a very, very similar process for a SHOP plan. Realistically, you should not need an agent or a broker to get that plan. If you just go to healthcare.gov, it should be fairly straightforward to make that happen. You would need to offer it to any employees that are full-time, which in this context does mean 30 hours a week. So I realize that's a little goofy there, that full-time equivalent's 40 hours, but to offer the coverage, it needs to be 30 hours. But that is the way it is written up. Typically, premiums for this usually fall around $500 to $700 per employee. Around $2,000 for family coverage for any employees. Obviously, you need to cover at least half of that. And then half of what you cover, you do get a tax credit for. So the government covers half of it. That's a non-deduct or a non-refundable credit. So you got to have actual taxable income in order to be able to fully utilize it. But that is the IRS subsidizing the premiums that you pay. So in reality, you only end up paying 25% of that premium if you're only doing the minimum there. So that can be a really good program. I will say this, that 500 to 700 is based on historical premiums. Premiums have gone up in 2026, not just because of the shortage of subsidies on individual ACA plans, but just because they've generally gone up for a variety of reasons. So that number might be a bit more inflated in 2026. This is another really good option for small businesses that are struggling to find a group plan that they can afford for their employees. And that is a qualified small employer health reimbursement arrangement, This specific plan arrangement, I should say, is only available to small businesses, that have less than 50 full-time equivalent employees. There are different arrangements for larger employers, not necessarily as applicable. I don't think we have a ton of clients who are going to hit over this 50 full-time equivalent employees. And realistically, at that level, a group plan is probably going to make more sense anyway. Key stipulation: you don't have a group plan, which, if you're looking at this, that's the whole reason. It's because you don't have a group plan. And what it allows you to do is you can make reimbursements to your employees for their premiums that they're paying out of pocket tax-free. It's not subject to income tax, no FICA, and obviously you get to deduct it from the business. It does have to be a reimbursement, so the employer itself can't directly pay any premiums, and the employee needs to provide proof. So usually it's pretty straightforward. Billing statement every month, just give that to your employer, and then you can get reimbursed for it. It's capped at that 6,350 per year for individual plan or individual employees. If they are married or they have dependents and they have family coverage, then it is 12,800. Those are the limits. So that's the maximum. If you want to, as an employer, you can set lower limits for how much you are willing to give out to your employees. But that's just the most you can do tax-free. Biggest caveat here is that for the employee, this reimbursement that they're receiving directly affects the subsidy they would get on their ACA plan. So you don't have to have a marketplace plan in order to qualify for this reimbursement, but most of the time that's what folks have if they have their own individual coverage. As far as rolling over, it is kind of up to the employer. You can set it so that you get it this month and that's how much you get. And if you don't use it that month, you lose it. Or it can roll over month to month or even year to year. If someone's been with you for a whole year, they didn't have coverage last year, and they want to start using that benefit now, they could roll over that benefit. The best thing about this is that it doesn't require really any complicated setup. There's no weird accounts you need to do. There's no, broker or agent you need to talk to set this up. As long as you write up the policy and you make your employees aware of it and you offer it to everybody, you can do this. It is very straightforward. Just let your payroll processor know. There is a specific box 12 code that this would fall under, but it is a fairly straightforward inclusion in payroll.
Just to chime in on that, actually, it reminds me of a point I should have made earlier. That is a huge difference between a lot of these deductions in the payroll systems is when you change them, it does change what code is showing up in that box 12. So just be very vigilant of that. Like Tom said, reach out if there's any question over it. But that is why one of the critical reasons you should not be, putting HSA into a medical insurance. It's going to show up as a completely different code. So yes, I'm sorry, I should have touched on that as well.
Right. So now we get to the real fun.
Yeah. I am going to ramble a bit here about some of our really fun payroll policy portions. You may have noticed we are reaching out a lot to get folks registered for unemployment, trying to get their UI rates. Rates are really the big one we're pushing for right now, but I know some of our newer folks, they haven't registered yet, all that good stuff. I know that it seems like if we are processing your payroll and payroll relief and everything has been paying correctly, that we are already, utilizing this information. But a lot of the times, payroll relief is the one handling it. We can't log directly into the website and see things unless we have your logins. They've been provided with us, or we were the ones to, set everything up. So we're really trying to push for this, make sure everybody's rates are correctly. And the reason for that, are correctly entered, and the reason for that is because if you have a slight difference in rate, that is going to be a massive tax difference by the end of the year. So you could have huge overpayments, huge underpayments, just because this rate is just slightly scrambled. So we're really trying to recoup, make sure all those rates have been sent into us. You should have gotten it right around the start of the year. We're kind of getting into March now, so we want to be really hammering people. Please make sure we've got the right rate. I have seen folks who end up with a giant credit because they've been paying way more than they were supposed to the whole time. And, we dig up a rate and it would have saved them a lot of money at the time. They don't have to go through the whole refund process, etc. So That is really one of the reasons we're pushing for it. Another reason we might be pushing you to log into the website is because a lot of states have gotten really strict with POAs. This didn't used to be the case. We used to be able to call a lot of the time and ask for stuff, and it was not a problem. They are getting really strict about it. I have hit so many brick walls lately trying to get people registered, and they don't have the POA. They don't want to talk to us. So if we start pushing you, hey, can you get logged into your UI and just tell us what those numbers are? It's probably because we don't have a POA and we're just trying to get it in quickly. We are still monitoring all of these taxes. We have prior rates for a lot of our clients. For the newer clients, we're able to still track if you don't have anything in yet what you should have paid once we get it in. So as long as you're getting it in before the deadline for these taxes, it shouldn't be a huge deal. But we're just really trying to make sure that that is compliant. Um, and I will segue from there into we are having some other upcoming changes. A lot of this is going to center around when things are submitted. They're going to have to do with those state logins, like we mentioned, which is going to go beyond the UI portion. We're going to be asking for a lot of those logins for like withholding. Ideally, our goal would be to have everyone's login set up so then we can have a administrator login and look from our own account separate from you guys, but still be able to get in there, see all the nitty gritty, all the details we need. So that's really what we're trying to push towards. We're not trying to just flop this in your lap and be like, here you go, this is for you to deal with now. We are going to still get ourselves in there at the end of it. We're just trying to do it legitimately so the state stops pushing back so much. Um, there also have been a past few email blasts detailing all the info here because we are going to be pushing folks to try to turn in payroll before the due date, at 4. Yeah, there's a few timelines, et cetera, et cetera. There will be the later emails coming out detailing all of this process. There have been some in the past. Really, the things you need to know is we're going to be trying to get payroll on a tighter timeline. So we're not, having folks miss payrolls. We're not going to be having folks, turning in really, really late, and then we don't have time to review, and then a colossal error gets missed, stuff like that. We're trying to make sure everything is in timely enough for review, timely enough to do all our due diligence, so there's not huge problems. So there will be some email communications coming out about that in the coming days, and our deadline that we're really going to be trying to make all these changes by is March 31st. So starting next quarter, we're hoping to have all these in place. And that pretty much has to do with the payroll side of things.
All right. Well, do we have any questions that the two of us could address, whether it's about health insurance or any other tax or payroll questions? We're always happy to help out in any way we can. So,
And just as a little addendum,
Like,
Simon, if it's something you don't want recorded, just let us know and we can have it recorded.
I was gonna say, as the only one on here right now, I don't know if we need it recorded. Um, I mean, really, so I'm a small business. I've got 3 employees, 40 contractors. Obviously, the contractors wouldn't be getting health insurance. One of our office staff is under 30 hours part-time, looking to possibly start health insurance for myself and the other employees.
Mhm.
Where do you recommend starting it? One-on-one meeting with you guys or meeting with Anthem, Blue Cross Blue Shield, see what they got, or I don't even know where to start. So,
I think it,
um,
it, it would not be a bad idea to at least first check healthcare.gov, see what shop plans you might be eligible for, and see if there's reasonable prices on there. Like I said before, that 500 to 700, that is historical pricing. I'm anticipating those premiums have probably gone up for 2026. Um, but I imagine they're probably still going to be more competitive than what a private plan might offer. Simon, who does your payroll right now?
I just QuickBooks.
QuickBooks. Okay.
Yeah,
So one option that some small business owners will use, uh, and I touch on this on the slides, but if you use the services of a PEO, and a professional employer organization, is that what it stands for? Yeah. Essentially, they function as an outsourced employee resource kind of company. It's as if your employees, including the S Corp owner if you want, are the employees of the larger PEO company, and they're contracted out to your small
gotcha.
business.
And I have some
Um,
experience with those through
yeah,
other companies I've worked
yeah.
with.
And one of the main benefits of that is that the PEO can provide fringe benefits like health insurance that a small business might not ordinarily be able to do cost effectively. So definitely health insurance and really, pretty much anything you can think of as far as fringe benefits for employees, a PEO probably offers it. Now, the downside of that is it's not cheap. PEOs can be a little pricey. It might be still cheaper than doing a normal group plan, but it's kind of something you'll kind of have to run the numbers on. Talk to a insurance agent that sells health group plans, see what premiums they might be able to offer you and your employees, and then maybe see about talking with a PEO like ADP or Paychex,
Mhm.
and see if they might be able to offer something more reasonable. Those would be my first two recommendations. Yeah, is definitely look
Got it.
into the shop plans first, then talk to an insurance agent and see what they could offer you. But again, if nothing else, and this is even something you could set up quickly, is you could start with that health reimbursement arrangement, and then once you get a group plan, then you can end that arrangement and start doing the actual group plan.
Got it.
As far as your personal health insurance, if you would qualify for the self-employed health insurance, you could start that even before a group plan happens. So if you have an individual plan or an ACA plan, you can have the S corp start paying those now. And as long as it's recorded properly in payroll and you get it recorded properly on the income tax returns for 26, it wouldn't be an issue at all.
Got it. Yeah, for me, I right now I have insurance through my wife's employer, so I don't know if that would still
Yeah,
work.
yeah, I
Yeah.
think realistically, as long as she has coverage, it's probably not going to work out for you to be able to get any sort of coverage through
Mhm.
the business.
Yeah.
All right. Well, if that's all we've got, I think we'll probably stick around for a little while, see if we got any stragglers. But it was great to have you, Simon. We're really glad
Yeah.
we can answer your questions and hopefully get the ball rolling on getting your employees some health insurance.
Yeah, definitely. Thank you.
Yeah, of course.
Thank you.